a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about financials ETFs. Now, these financials ETFs, which hold bank stocks in particular, but also insurance, regional banks, thrifts, etc., these had taken a beating over the past year. So usually we think that rising rates benefit banks, but in the current environment, investors were more concerned about the impact of rising rates on the US economy. They were worried that the Fed's aggressive tightening campaign is going to push the US economy into a recession, and that hurt banks. And also rising, we know that interest rates have risen, mortgage rates have risen. That has impacted the mortgage business of these banks, the refinancing business. The housing boom is over now. And also deal making activity also dried up because CEOs were concerned about the health of the economy. And we know that since mid-June, stocks have started rebounding because some investors felt that the sell-off could be overdone. Now, again, this summer rally has taken a breather. It has hit a pause over the last couple of days, and it remains to be seen whether it can continue. But it seems that bank stocks are quite cheap at the current levels, and they have already priced in the probability of a recession. And this week, investors would be watching, they would be listening to the Fed's comments, Fed officials' comments at the Jackson Hole Symposium in Wyoming, and hopefully we will get some signals about the health of the economy and the Fed's tightening campaign. And if we get some signals that the tightening would not be too aggressive, then these bank stocks could rebound. So we'll take a look at three financials ETFs, which provide very different kind of exposures. So let's take a look at these ETFs by going to the quote pages on Zacks.com. So the first one we are talking about is the most popular product in this space, Financial Select Spider Fund, ticker symbol XLF, with about 33 billion in assets, and very cheap too. Just 10 basis points expense ratio. It holds financial sector stocks from the S&P 500 and has 66 holdings currently. Follows market cap weighting schemes. So let's take a look at this ETF by going to the quote page on Zacks.com. You can read our research report articles and using the link. And a nice dividend yield too. This is also I wanted to show you. You can go to the external home page then and learn more about this ETF. So this holds, as I mentioned, the entire financial services stocks from the S&P 500, which includes insurance, banks, capital markets, mortgage, REITs, consumer finance, thrifts, and mortgage finance companies. So you get very broad, diversified exposure. But looking at the top holdings, Warren Buffett's Berkshire Hathaway has almost 14% exposure. So being market cap weighted, it is top heavy. Then you see JP Morgan more than 9%, Bank of America, Wells Fargo, S&P Global, etc. Now, the second one, which I am highlighting, is different. It provides exposure to regional banks, US regional banks, and it also follows an equal weighting scheme, not market cap weighted like the earlier one, has about 144 holdings. So you get very diversified exposure. This is also very popular with investors, about 3.6 billion in assets. Little bit pricier compared to the other one because of its equal weighting scheme, 35 basis points in expense ratio. Again, you can go to the quote page on Zacks.com and using the link very nice dividend yield, and I also hold this ETF in the ETF investor portfolio that I manage. Now you can go to the external home page and learn more about this ETF. As I mentioned, it holds regional banks and follows an equal weighting scheme. So well-known regional banks, First Citizen, Silvergate, Old National Bank Corp. These are the holdings in the ETF now, and they would be in almost equal weight at the time of rebalancing. They are brought to equal weights. The third one, which I am highlighting, is provides exposure to banks in particular. So money center, regional banks, and thrift institution. It is by Invesco. The ticker symbol is KBWB. It is concentrated with just about 25 holdings, 2.2 billion in assets, and this also charges 35 basis points. So again, you can go to the quote page on Zacks.com, and this has an even better dividend yield. You can go to Invesco web page, and you will see it holds everything: largest money center banks, regional banks, thrift institutions, etc. Looking at the portfolio, you will see Wells Fargo. So you will not get exposure to Berkshire. It only banks and thrift institutions in this ETF. So Wells Fargo, Citigroup, Bank of America, US Bank Corp, and JP Morgan. These are the top holdings, and you will see that this ETF is also top heavy, though not as top heavy as XLF, but still a lot of exposure to the largest banks in the portfolio. On the next slide, I have the comparative performance versus the S&P 500 over the past year. So you will see that the regional banking ETF has done best. In fact, it is up over the past year about 6%, and the others are down around 4 to 6%, including the S&P 500 index. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos so that you do not miss anything, and we will see you next week.